What if I told you that Congress just approved a set of brand new Social Security rules, and most seniors and retirees have absolutely no idea how dramatically these changes are going to affect their monthly checks? What if missing just one of these updates cost you hundreds or even thousands of dollars over the next few years? And what if the government is already counting on you not paying attention? Here's something that should stop you in your tracks right now. Over 70 million Americans depend on Social Security benefits to pay their rent, buy their groceries, cover their medication, and simply survive each month. And yet, right now, most of those 70 million people have no clue that the rules of the game have fundamentally changed. Think about this. Are you receiving the full amount of Social Security you've actually earned over your lifetime? Are you being taxed on your benefits when you legally don't have to be? Are you at risk of losing part of your monthly payment because you don't know about a new identity rule that just went into effect? These aren't hypothetical questions. These are real situations affecting real people right now, and the answers depend entirely on whether you know about these new congressional-approved SSA rules. So here's what we're going to do today. In the next several minutes, I'm going to walk you through every single major change that Congress has approved for Social Security, the increases, the new laws, the new requirements, the new tax breaks, and yes, even the new risks that could silently drain your benefits if you're not careful. This is one of those videos you want to watch all the way to the end. Take notes, share with your family members, and maybe even bookmark, because what you're about to learn could genuinely change your financial life. Before we dive in, if you're watching this and you care about protecting your retirement income, and I know you do, please take 2 seconds right now and hit that subscribe button and ring the notification bell. We cover Social Security, Medicare, and retirement changes every single week, and this is exactly the kind of channel you need in your corner. And if you have a parent, a spouse, a neighbor, or a friend who collects Social Security, please share this video with them right now. This information is too important to keep to yourself. All right, let's get into it. Let's start with the biggest news first, the change that millions of public sector workers and retirees have been waiting for, literally for decades. On January 5, 2025, President Biden signed the Social Security Fairness Act into law, and it is enormous. So, what exactly is the Social Security Fairness Act? Well, for over 40 years, there were two provisions buried inside federal law that quietly reduced, or in some cases completely wiped out, Social Security benefits for certain retirees. These provisions were called the Windfall Elimination Provision, known as WEP, and the Government Pension Offset, known as GPO. And for 4 decades, teachers, firefighters, police officers, and other public sector workers were getting cheated out of benefits they had legally paid into. Here's how it worked. If you spent part of your career in a job that didn't withhold Social Security taxes, like a state or local government job, the WEP reduced the Social Security benefits you earned from other covered employment. The GPO was even more aggressive. It reduced or eliminated spousal and survivor benefits for people who received government pensions. Imagine being a widow of a federal worker and having your survivor benefits nearly wiped out simply because of a pension you earned through decades of public service. That was the reality for millions of Americans. The Social Security Administration has now confirmed that it is processing retroactive payments and increasing monthly benefits for everyone affected. That means if you were one of the people impacted by WEP or GPO, you may be owed back pay, retroactive benefits going back to the date the law was enacted. Have you already received your retroactive payment? If not, the SSA says you do not need to file a new claim, but you do need to make sure your mailing address and direct deposit information on file is current and accurate. You can verify this by logging into your personal My Social Security account at ssa.gov My Account. Are you a retired teacher, firefighter, police officer, or another government worker who may have had your benefits reduced under WEP or GPO? Then this law is specifically for you, and the money you're now owed is real. Don't let it sit unclaimed. Now let's talk about the cost of living adjustment for 2026, because this is the number that every single Social Security recipient has been waiting to hear. The SSA officially announced a 2.8% COLA beginning in January 2026. That's up from 2.5% in 2025, and it translates to an average increase of about $56 per month for individual retirees, bringing the average monthly check from $2,015 up to $2,071. If you're part of a married couple where both spouses receive benefits, you'll see an average combined increase of about $88 per month, pushing the average couple's benefit from $3,920 up to $3,008. Now, before you get too excited, I need to tell you something that the headlines are leaving out, because this is where the catch comes in. The SSA automatically deducts your Medicare Part B premium from your Social Security check each month. And here's the problem. The standard Medicare Part B premium is jumping from $185 to $202.90 in 2026. That's a $17.90 increase. So if your COLA is adding $56 to your monthly check, but Medicare is taking back $17.90 of it, your actual real-world increase is only about $38.10 per month. In other words, almost one-third of your COLA increase is immediately eaten up by Medicare premium costs. Does that seem fair to you? Does it feel like your benefits are truly keeping up with the real cost of living, the cost of groceries, medications, housing, utilities? According to an AARP survey, 77% of older adults said that a 3% COLA would not even be enough to keep up with their rising expenses. And yet this is the system we have. The COLA is better than nothing, and it is a real increase in real dollars. But every retiree needs to plan around the fact that part of every COLA increase is immediately absorbed by rising Medicare costs. The COLA also applies to survivor benefits, family benefits, and Social Security disability insurance payments. SSI recipients, those receiving supplemental security income, received their first COLA-boosted payment on December 31, 2025. This next change is one that catches people off guard every single year, and I want to make sure it doesn't catch you off guard. The full retirement age, or FRA, is the age at which you become entitled to 100% of your Social Security benefit, and it is changing in 2026 in a very significant way. Here's the history. Back in 1983, Congress passed amendments to the Social Security Act that gradually raised the full retirement age from 65 to 67. That was a 42-year process, and in 2026, it finally reaches its conclusion. For anyone born in 1960 or later, your full retirement age is now officially 67 years old. Why does this matter so much? Because the age at which you claim Social Security has a massive impact on how much money you receive for the rest of your life. If you claim benefits at 62, the earliest possible age, your monthly benefit is permanently reduced. How much? Your benefits are reduced by 0.59% for every month you claim before your full retirement age, up to 36 months. Beyond 36 months, there's an additional reduction of 0.512% per month. Let's put that in real numbers. If your FRA is 67 and you claim at 62, you're claiming 60 months early. That is a permanent reduction of roughly 30% of your full benefit for life. On a $2,000 per month benefit, you'd be locking in $1,400 instead of $2,000 every single month for as long as you live. On the flip side, if you delay claiming beyond your full retirement age, your benefit grows by 8% for every year you wait, all the way up to age 70. So waiting from 67 to 70 could add 24% to your monthly check. That's a massive difference over a retirement that could last 20 to 30 years. Are you approaching retirement age? Do you know exactly when your FRA is? Do you know how much delaying by even 1 year would add to your lifetime income? These are questions you need to be asking right now, because the decisions you make around claiming age are among the most financially impactful decisions of your entire retirement. Now, I need to talk about something that could save eligible seniors thousands of dollars, and it's buried in a piece of legislation called the One Big Beautiful Bill, which was signed into law on July 4th, 2025. This is brand new, and the vast majority of older Americans have not heard about it yet. Starting with the 2025 tax year, meaning the taxes you'll file in 2026, there is a brand new additional tax deduction of up to $6,000 available exclusively for people aged 65 and older. This is on top of the existing standard deduction and the existing additional deduction that seniors already qualify for. For a single senior, the total package of deductions for 2025 could be as high as $23,150. That is a significant reduction in taxable income. So who qualifies? If you are at least 65 years old by the end of 2025 and your modified adjusted gross income is up to $75,000 as a single filer or up to $150,000 as a married couple filing jointly, you can claim the full $6,000 deduction. Even if your income is higher, there is a partial deduction available for single filers earning up to $175,000 and married couples earning up to $250,000. Here's why this matters so much for Social Security recipients specifically. Many retirees pay federal income taxes on a portion of their Social Security benefits. Up to 85% of your benefits can be subject to federal income tax depending on your combined income. But this new $6,000 deduction reduces your taxable income. And for many retirees, it could actually bring their income below the threshold where Social Security benefits get taxed at all. Think about that. You could potentially stop paying taxes on your Social Security income entirely or significantly reduce how much you pay, simply by taking advantage of this new deduction when you file your taxes. This is not a trick or a loophole. It is a legal congressional tax break specifically designed for seniors. But it's only temporary. It runs from the 2025 tax year through the 2028 tax year. After that, unless Congress renews it, it goes away. Are you planning to work with a tax professional when you file this year? Are you going to make sure they know about this new senior deduction? Because this is not something that will show up automatically. You need to know to ask for it. Here is a change that blindsided a lot of people earlier in 2025, and it's still catching seniors off guard. The Social Security Administration has completely overhauled how it verifies your identity, and if you don't adapt to these new rules, you could face delays in your benefits, disruption to your payments, or serious problems processing any changes to your account. Here is what changed. As of April 2025, the SSA ended the practice of allowing people to verify their identity over the phone. That's gone. No more calling Social Security and confirming who you are with your Social Security number and some basic personal information. Under the new rules, if you need to verify your identity, you have two options. You either do it online through your personal My Social Security account at SSA.gov My Account, or you verify in person at a local Social Security field office. The SSA says this change was made to combat fraud and identity theft, and that is a legitimate concern. But the reality is that this change has created real hardship for many older Americans who don't have access to reliable internet, who are not comfortable navigating online government systems, or who live in areas far from a Social Security office. The SSA did delay the rollout slightly in response to public complaints, but the new rules are now in full effect. So, what do you need to do? First, if you haven't already, go to SSA.gov My Account and create your personal My Social Security account right now. Set up your login, verify your email address, and confirm that your mailing address and direct deposit information are accurate. Second, if you are not comfortable doing this online, you need to locate your nearest Social Security office and plan ahead. You do not want to be scrambling to get to an office in person during an emergency situation. Have you updated your My Social Security account recently? Do you even have one set up? If the answer is no, this is something you need to take care of before you need it. because if you ever need to change your direct deposit, update your address, or handle any kind of claim, and you can't verify your identity, your money could be delayed or disrupted. Let's talk about something that affects a growing number of retirees, people who are collecting Social Security but also still working. Maybe you went back to work part-time, maybe you never fully stopped, or maybe you're thinking about taking on some extra income. Whatever your situation, you need to understand the Social Security earnings test, because in 2026, the limits have changed. If you are collecting Social Security retirement benefits, but you have not yet reached your full retirement age, the SSA has limits on how much you can earn from work before it starts temporarily reducing your monthly payment. In 2026, that threshold is $24,180 per year, or $2,040 per month. For every $2 you earn above that limit, the SSA withholds $1 from your Social Security benefit. Now, this sounds scary, but here's something crucial to understand. The money that gets withheld is not gone forever. Once you reach your full retirement age, the SSA recalculates your monthly benefit and increases it to account for the months when benefits were withheld, so you do eventually get that money back, just spread out over time. For people who are going to reach their full retirement age sometime during 2026, the rules are more generous. In the months before you reach your FRA that year, the earnings limit jumps to $65,160. Beyond $65,160, the SSA withholds $1 for every $3 in earnings, and once you actually hit your full retirement age, the earnings test disappears entirely. You can earn as much as you want from work with zero impact on your Social Security benefit. Are you currently working and collecting benefits at the same time? Do you know where you stand relative to the earnings limit? Understanding this rule could help you plan your work schedule, your retirement timing, and your overall income strategy far more effectively. Now let's briefly talk about a change that matters whether you're already retired or you're still in the workforce building toward your retirement. In 2026, the Social Security wage cap, the maximum amount of income subject to Social Security taxes, increased to $185,500. That's up $8,400 from the 2025 limit of $176 to $100. What does this mean? If you earn wages, you pay 6.2% of your income towards Social Security, and your employer matches it. The cap means that only income up to $184,500 is taxed for Social Security purposes. Anything above that is exempt from Social Security tax. So while high earners get some tax relief above the cap, the increase also means that more of your earnings are going into the Social Security system and building your future benefit. The number of credits required to qualify for Social Security also went up slightly. In 2026, you need to earn $1,190 to receive one credit, up from $1,110 in 2025. You can earn a maximum of 4 credits per year, and you need 40 total credits, roughly 10 years of covered work, to qualify for retirement benefits. This doesn't affect people who are already collecting, but it's important for younger family members who might be in the middle of their working years. I want to take a moment to talk about something that most of these congressional announcements will never headline, but that every retiree and every near retiree absolutely deserves to know about, and that is the long-term health of the Social Security trust funds. Here's the honest reality. Social Security has 2 trust funds, one for retirement and survivor benefits, and one for disability benefits. For years, actuaries and policy analysts have been warning that these funds are on a path toward depletion. The latest projections now estimate that the Retirement and Survivor Trust Fund could run short as early as the 4th quarter of 2032. That's less than 7 years from now. When a trust fund is depleted, it does not mean Social Security goes away. What it means is that the program could only pay out what it's taking in from payroll taxes, which could mean an automatic benefit cut of approximately 23% across the board. A 23% cut on a $2,000 monthly benefit means $460 less every month. For someone living on a fixed income, that is potentially devastating. And here's the painful irony. Some of the very changes that are most popular and that are genuinely good for retirees right now are also accelerating that depletion. The Social Security Fairness Act, while absolutely the right thing to do for affected retirees, does add costs to the program. The new $6,000 senior deduction reduces the tax revenue that flows back into the trust funds. Both changes, while beneficial in the short term, put additional pressure on the long-term solvency of Social Security. This is not said to alarm you unnecessarily. It's said because every senior and retiree deserves to plan their financial future with open eyes. Congress has the power to fix the trust fund problem through a combination of adjustments to taxes, benefits, and retirement ages, but so far that political will has not appeared in sufficient force. Staying informed, staying engaged, and making your voice heard as a voter matters more on this issue than almost any other. All right, so we've covered a tremendous amount of ground today, and I don't want you to walk away from this video feeling overwhelmed. I want you to walk away feeling equipped. So let's talk about concrete action steps, things you can actually do this week to protect your benefits and make sure you're getting everything you're entitled to. The very first thing you need to do is go to SSA.gov My Account and either set up or update your personal My Social Security account. Verify your direct deposit information and your mailing address. In the age of new identity verification rules, having an active online account is no longer optional. It's essential. Second, if you are a retired teacher, firefighter, police officer, or any other public sector employee who was affected by WEP or GPO, check with the SSA about your retroactive payments. You don't need to file a new claim, but you do need to confirm your account information is current so that your payment reaches you. Third, talk to a tax professional before you file your 2025 taxes. Ask specifically about the new $6,000 senior deduction from the One Big Beautiful Bill. Ask how it could affect your taxable income, and ask whether it changes how much of your Social Security benefits are subject to federal income tax. Fourth, if you are approaching retirement age, sit down and actually run the numbers on when to claim Social Security. Whether you're 60, 62, 64, or 66, understanding the difference in lifetime income between claiming early at your FRA or at age 70 could be one of the most important financial decisions of your life. And fifth, share this video. Seriously, how many people do you know who depend on Social Security and who have no idea that any of this happened? A simple share right now could genuinely help someone in your life protect their retirement income. Social Security is not just a government program. For tens of millions of Americans, it is the foundation of everything. The ability to pay rent, to buy medication, to keep the lights on, to live with dignity in their later years. And when Congress changes the rules, whether for better or worse, every single one of those people deserves to know about it. That's why we're here. That's why we make these videos. And that's why you're being here today, watching all the way through, truly matters. So here's my final question for you. What was the one thing you learned today that surprised you the most? Drop it in the comments below. Was it the new $6,000 tax deduction, the WEP and GPO elimination, the Medicare premium eating into your COLA? Whatever it was, I'd love to hear from you. And so would the 70 million other people who depend on Social Security and are trying to figure out what all of this means for their lives. If you haven't subscribed yet, please do that right now. Hit the like button if this video helped you, and check out the next video on your screen right now. It goes even deeper into how to maximize your Social Security benefits and avoid the most costly mistakes that retirees make every single year. I'll see you in the next one. Take care of yourself and take care of your retirement.